Hi guys, and welcome back after the weekend. Hope you all had a great weekend. And as we start the week off here, it's Monday and the DXY is looking good pre-open. We're still up at 97. We're having a look through the bonds and the various worldwide markets and funds over the coming 5 minutes, just to give you a quick overview and rundown on what to have a look at in the week coming. So over here on our bond curve, you can see that we have this laid out. So we have the red is the 2-year bond, the orange here is a 10-year bond, and the green is the 30-year bond. And as you can see, we are starting to really get a very tight spread between the 10s and 2s. And there was a headline just recently, we'll go over in a second, with the FOMC and Powell and Trump's positioning on this, on what's to look ahead for in the next year in 2019 in terms of the rate hikes that we might have down the road, because economists have scratched what they were thinking and gone back to lower the amount of hikes we might be seeing. So again, we're looking, it's the current zeitgeist right now. We're looking to see if we get a yield curve inversion. So we're starting the day off here to have a look at things. And as you can see, we've had a slight dip and sideways now on these bonds. So, let's keep eyes on this as we progress through the week and into 2019, because it is important. Over to the mutual funds, and let's see how we're doing. Now, year to date, it's starting to really turn red here. Vanguard is down 14%. Fidelity's Contra Fund is down 7%, 7 and 4/10, and Fidelity's Contra Fund K is down 7 and 4/10 as well. So going down across the board, U.S. funds, Vanguard, Fidelity, is selling off. Commodity funds also selling off. Bond funds in the green, barely, and major funds are down, just a tick there. So it's starting to cut in. We're having a look on the daily, and it's red as well. Let's just go back across to our chart here on the DXY. Obviously, we have this strong dollar. Let's just go on the technicals here a second, and we'll just bring up look in the inner things 1 second. So if we just put this on the candles for a second, and we go on to the monthly, we can see how the DXY has really been trading through the last 2 years with a more accurate view, and just zooming out here, you see the dollar is pretty high really in comparison to where we were in 2012, 2010, going back. We had that long run up, month on month on month on fantastic gains throughout 2014 and 2015. Is it time we came back down out of this range? Is it time we came back to a 2012 level of a cheaper dollar, a less powerful dollar? Well, we'll see soon. But yeah, anywhere coming down below this 90 range would be real discovery. And you see, for the last month, we have this it's sort of, it's just sitting there. I don't know if that's going to be a reverse there, or eyes on this. We've got dodgy here, only back a couple months. Is this starting to run out of momentum? We will find out. Let's just go across on the headlines here on the front page from investing.com today, published 18 minutes ago. U.S. futures flat to lower as trade economic worries begin to weigh. So the U.S. futures pointed to a flat to lower open on Monday amid trade concerns and over this global economic slowdown. S&P 500 dipped 3 points, Dow ticked down 33 points, and the Nasdaq is down 6 points. So all three indexes closed on Monday in correction territory for the first time since March 2016, after China's industrial output and retail sales growth missed expectations. And why is that important? Why are we talking about that? Well, the China's automobile industry has been in solid growth since the 90s, and last year was the first year that we've seen no growth, that we've actually seen decline. So these trade tensions between the US and China also weighed on markets. US Trade Ambassador Dennis Shear said that China's unfair competitive practices was harming foreign companies and in violation of the WTO's trade rules. So this is a pot on the bubble. Where can we go from here is, there's a discussion in the commodities headlines I'll go over in a second. Basically, it does point towards a risk-off purchasing into gold and other risk-off avenues, land, maybe crypto. We'll see what the appetite's like. That would be interesting if money began to flow into crypto. But yeah, so we'll just go across now to this next one here. So yeah, commodities on the week ahead. Oil. Wow, after we had that huge sell-off, we had the run for 100, didn't get there, went up to 70, touching 80 on the barrel, and now we're way down. So the OPEC has promised oil output cuts, and the Saudis are planning their first strike with shipments to the US. Yet these factors alone aren't expected to push crude prices into a sustained rally before the year end, with traders likely to wait out until 2019 demand data before taking any action on opening longs. Fears of a global slowdown and skepticism over the US-China ties could also cap activity in gold. And the story could be a little bit different for gold, it goes on to say, which faces a pivotal week with the Fed scheduled to decide on whether or not it should hike rates for a fourth time this year. Remember, we was talking about the bonds at the beginning, yeah? So the market is priced in at a 75.8% chance of a 2% to a 2.25 rate increase at the conclusion of the central bank's December 18th, 19th policy meeting, which will be the last policy meeting for the year. So if we see this chance of this rate hike, that will be 4 rate hikes this year. As we know, the Fed was doing their balance sheet normalization. So whether or not this has accounted for everything and the normalization has finished now, and we'll see in 2019 less hikes, we have to see how Powell plans to bring that in. Trump is looking to have a cheaper dollar and a looser looser hold on this currently high credit rate. So we have to see. This tightening has been going on for quite a while, so will we get some easing? And it goes on to mention that here, with many betting the Fed will pause any tightening cycle after December, the dollar is expected to gain modestly if there is indeed a hike on Wednesday. So all eyes on that. If the central bank stays on course, it could be a precursor to sharp weakness in the greenback in early 2019, a factor that may drive gold towards April's 1,300 high over the next 2 weeks. So we'll wait to see what happens on that. Often a risk off into gold is a high potential. Like I was just mentioning before, will that money flow into gold or will it flow into crypto? Where will it go? So just to cap off there on commodities, crude. This is what I'm talking about. Prior to this, we were hearing calls for 100, and it sold off hard all through the month of November. And here we have it now at the bottom in December. So it's quite a good risk reward if you're looking to go long from the bottom of the range with a tight stop below. Obviously, this is opinion. It's not trading advice. Do whatever you want with your money. But that is just opinion. It's not trading advice. It's not a signal or anything. But yeah, there is a high risk reward potential here with a tight stop just below the range. So on any price discovery below 50, or below 51 right now, because if we come back up, then there's going to be some gains for you to be had. So yeah, that's about a run over of where things are sitting right now. Let's have a look across on the indexes, and just before we wrap it up here, and yeah, I'll be doing another video briefly in a moment. I'll be uploading again on the cryptocurrency markets and having a look through that. So if you want to check out that, just have a look on the next video that I'll link at the end of this one. So yeah, over on the world indices, Americas, as you can see, it's really bearish out there. Europe, a little better, and Asia, it's the EM that's really getting the bid. It's where it's getting hit hard. We're up on the Hang Seng, we're up on the Nifty. It's looking bullish on the ASX as well. So Where's it likely to go at the end of the week? We'll see. The only indexes which are showing positive gains right now is the Nifty 50 and the ASX. So yeah, let's see how this momentum takes us, and if we're going to see a further step down on the S&P at the open at the beginning of this week, as we may set the tone going forward. So yeah, the futures were pointing down. Let's have a look now at how we're looking, and have a look at the technicals for a second. Just bear with me 1 second as this loads up. Okay, and there we go. So yeah, let's have a look on the monthly. You can see where we're starting to head towards now, right? A sharp sell-off for the last 2 months, where we have the doji there, and this month it's really testing this lower range now. We have those low wicks. I think it's the writing's on the wall for anyone who's looking. Bringing in our stochastics, the bottom's not in on monthly. We go to weekly. Some kind of formation as we clutch at this level, but unless we see a retracement back, it's very, very possible that we're going to see lower lows on the S&P. Let's load up some of our moving averages and just have a look at where we are in terms of weekly moving averages. I'm going to put it on the 100. We're sitting right there, yeah? Right there on the 100. And let's go to the 200. It's some way down, right? So hold on to your hats, right? If we see a decline on that scale, it's gonna be, yeah, it's gonna be a cold winter. So let's just just hold on to your hats on that. We have the open coming up a little later. Right now market's closing on pre-open, so in about 4 or 5 hours we ought to see where the S&P is heading, because if we start break through this 100 level, the next level down is the 200, which I just plotted there below. If we just take all that off the chart and just load up our fib, Anachi, and we do a high, low. You can see where we're kind of fitting right now. We do it just candle body to candle body, just to get a fuzzy idea of where we are in terms of the extension. And these are only Fibonacci levels. It can go to anywhere. We do a trend-based extension based upon the last on this swing high, swing low. It could be somewhere around 2,500 or even 2,400 where we find the next support. Not to say we couldn't revert back up to 2,600 and then continue off in a kind of very nice pullback, but I think the writing's on the wall on that, and it is topping out. We'll just look at one last example. We just put our GAN in. Now remember, with GAN, one thing that's important with GAN is you got to get your angle right. Otherwise, it's just baloney. So how do we do that? First of all, you get trend angle. Go from the low, 45 degrees, not 33, 45. Here we go for the center, 1-1 on the 45. You see what's happened? We broke off. It was coming up quite nice on the second deviation, and so it could clutch at this before coming to here. The reversion up to go for 3,000 again, that would be the bullish move. I'll be watching those two levels carefully on where it's about to go. But yeah, who knows right now? Is the bottom forming? We need to see. Risk reward on that, obviously with tight stops below. If you do get the retracement, even a 50% retracement up here, it's going to look, it could come all the way up or so. let's see what happens. There is some long candles there on the weekly. We go into the daily for a closer look. It seems to be really choppy. Volatility is back in the market. The VIX is right up, and it's not abating. So, you know, with choppy days like this, it's a trader's dream, right? Lots of money to be made on the S&P. Indexes are moving very nicely at the moment. So get in there. Let's make some money. Going across to some other indices that I like checking is the UK 100, the FTSE. So this is an interesting market to trade right now because the UK is having obviously one of the largest changes in its, shall we say, governance, or its actual, like, should we say, economic structure, its macro structure, because of this Brexit deal. And if you've not been following that and not aware on that, I will be posting other videos about the Brexit, so you can get a full rundown on exactly, you know, the history of it and the, you know, the moving parts. But just to give you the sort of TLDR, the short run of it, essentially the UK is in a huge time of confluence where we don't know that actually what is coming around the corner in terms of the trade. You know, the deal that's going to be made, like the trade tariffs, the single market, quite a few moving parts here which we're not actually clear on. If we just pull out some moving averages on the daily, you see that things have been bearish in a 100-200 death cross on the daily MAs for, you know, a while. It's been a minute. Although there was quite a nice run as the British pound was devalued, making, you know, UK stocks more attractive for investors. Remember, this has been going on for quite some time. For the last 2 years, we knew about the EU referendum. It was since David Cameron's time in government. He's since stepped down, and Theresa May is the PM. Theresa May, whether or not she has the deal right now, we don't know, although there is a vote of non-confidence. Now, what a lot of people don't know behind the scenes is that Theresa May's husband is a manager at one of the largest funds on the Square Mile in London, and he's in charge of over like $1.5 trillion. So he's definitely well connected. He's got a fair few bob, and I don't believe that there isn't some, you know, hidden hand movement going on behind the curtain in terms of relationships and dinner meetings and stuff that, you know, people she could be schmoozing and talking with, because Teresa's definitely connected. They're a power couple that's very modest that people are not aware of. So could be some, you know, tricks hidden up her sleeve yet. But saying that, it's been a rough 12 months for the FTSE, with some really, really deep days where it's just dug down. And then a lot of these, you know, high wick days, and then again mass dumps. Now, what's to say it doesn't come down even more? Let's go and look on over on our weekly. We're sitting at where we were around like a year ago, 2 years ago. So, you know, it is no reason why we don't come back down into this range or even lower. If appetite does take it. Remember, in 2012 we were all the way back here, and then we did stay in 2014 around just below 7,000 for quite a while, and then, you know, we've had this run up above 7,000. I'm hopeful, ever the optimist, that 7,000 resistance becomes support and we bounce again to see new highs, but must be realistic. Again, this is just opinion. It's not trading advice. Okay, and lastly, we're going to have a little bit of a look over the only one that was in profit when we had a look on the world markets, the Hang Seng Hong Kong index, and we will wrap it up after this. So yeah, you can see the Hong Kong indexes overall throughout 2017. It's been a very bullish market, which only just came off the boil in February of 2018. With, you know, it still pretty much hold its level there until breaking down in the last few months. Now, whether or not this is a pullback correction and we're going to see another sprint to higher highs, it has to be, you have to wait and see how the market matures. It is a market that's prone to dips and jumps and does seem to recover, quite amazingly. That was a hell of a run that we had when it moved there, almost 80% gain, right, over the past couple of years. So yeah, it's definitely an interesting market to watch, the Hang Seng, and the stochastics is showing right now on the weekly that we are really in limbo. We could be seeing a divergence come out of here, and we could go either way. So depending on which way these talks are going, with obviously with Trump and with the mainland and with everything that's going on right now with this trade war discussion, it's an interesting dynamic to trade, and obviously it has been a very bullish market. If that's going to completely come down and we're going to see us go under the 20k or head towards it, has to be seen. Right now we're just holding support on the 100 moving average, and you see we just dropped below the 200 there. That's the 200 I'm plotting now. So that has it for indices right now. Thanks very much for watching, and yeah, if you want to see more about crypto markets, just check the next video I'm uploading, and yeah, cheers.